It's your daily dose of corporates and markets. You're watching Corporate Central. I'm Shrestha Tiwari. Over to the day's big corporate stories. Aviation watchdog DGCA will conduct a special audit of grounded airline Go First facilities in the national capital and Mumbai from July 4th to July 6th before approving the revival plan for the resumption of flights. According to a senior official, the senior official at DGCA on Friday said that after a preliminary review of the resumption plan submitted by the resolution professional for Go First on June 28, the regulator has planned to conduct a special audit. Go First on Wednesday indicated to the DGCA that it plans to restart operations across 78 routes and 160 flights daily. The airline's resolution professional Shailendra Ajmera submitted a resolution plan to the civil aviation regulator for the resumption of operations, but no specific timelines seem to have been mentioned. The path for delisting of ICICI Securities, a subsidiary of ICICI Bank's broking business, has been cleared by ICICI Bank. The meeting held on June 29th, the board approved the proposal for delisting. However, this delisting will not be through cash payout but through share swap. ICICI Bank holds about 75% stake in this company, and after the delisting, ICICI Securities will become a subsidiary of the bank. Shareholders of ICICI Securities will get 67 shares of ICICI Bank for every 100 held in ICICI Securities. It will take 12 to 15 months to complete this process of delisting or acquisition by ICICI Bank. The board of BPCL, a Maharatna government company and the country's second largest oil marketing company, has approved raising capital through a rights issue. In the meeting held on June 28, the board has approved to raise up to 18,000 crore rupees. This amount will be used to achieve the objectives related to energy transition, net zero and energy security. In this year's budget, the government had announced a total investment plan of 30,000 crore rupees in the three oil marketing companies. However, the investment through this rights issue is not expected to increase the government's stake in the company, as the government has a 53% stake in the company till March end, and to retain it, the government will have to invest half of the total amount of 18,000 crore rupees. The Reliance Capital saga may finally be coming to an end. The creditors to Reliance Capital have reportedly voted in favor of the bid by Hinduja company IndusInd International Holdings. The company has submitted a bid of 9,660 crore rupees. Lenders could recover about 10,000 crore rupees, almost 40% of the verified claims. Reliance Capital has a cash of about 400 crore rupees. As many as 99.6% creditors have voted in favor of the proposal. And Center has allowed ZTE, a Chinese telecom gear maker, to provide optical transmission equipment worth 200 crore rupees to Vodafone Idea for the updation of its network in Gujarat, Maharashtra and MP. ZTE and Huawei have also applied to become a trusted source. The trusted source tag is required for a company to be eligible to get fresh telecom network equipment contracts. Meanwhile, Vodafone Idea subscribers have declined for the 25th month in a row in April, with even 4G users switching to rival operators' 5G network. As per a Jefferies report, VIL's 4G subscriber losses in April 2023 were the second highest for 4G subscriber losses in 2 years now, which suggests that 5G rollouts by Bharti and Jio are taking away VIL customers. VIL has been struggling to invest in rolling out new 5G networks without any fresh funding. Banks are yet to give fresh loans to the telecom operator given the large debt on its balance sheet. The board of Amrutanjan Healthcare, a Chennai-based company that manufactures products related to pain relief, has approved the buyback proposal. In the board meeting held on June 29, the buyback of 3.2 lakh shares of the company has been approved. Overall, there will be a buyback of shares of 1.1% of the company, which will be done at a price of 900 rupees per share. That is, the buyback price is at a 35% premium to the closing of June 28th. Let us also tell you that the company will spend a total of 28.80 crore rupees on this buyback, which will be done through tender route. July 13th has been fixed as the record date for this process. That is, all the shareholders who have shares of the company in their demat account on July 13th will be eligible to tender shares in this buyback. The news of approval of the buyback saw a jump of up to 16% in the stock on Friday. Higher education and upskilling focused EdTech UpGrad is in talks to acquire US-based Udacity according to media reports. Udacity, which has been on the block for a few months now, is talking about selling a majority stake through an equity swap. Udacity is currently valued at over $100 million. It had earlier quoted about $200 million to an earlier suitor. Udacity had a revenue of around $100 million but has been struggling with its customer retention rate of about 70%. Also, its B2C business has been struggling with 70 to 75% of the revenues coming from enterprise clients. Two updates on the EdTech company Byju's. First is that Byju's case has exposed the flaws of the auditing regulator, National Financial Reporting Authority, that is NFRA. Generally, in incidents like Byju's, NFRA has the right to investigate, but the scope of investigation of NFRA is limited to companies listed in the stock market, banks, insurance companies and big government companies. Private companies like Byju's currently do not come under the purview of NFRA. The second update is that in the midst of continuous negative news doing rounds for the company, Byju's founder, Byju Ravindran, has assured his employees through a town hall meeting that the condition of the company is not as bad as it is being told in the media. In this town hall meeting, Ravindran talked about technology and learning but did not acknowledge the recent layoffs. Reportedly, according to an employee of the company who attended the town hall meeting, the chat box was kept disabled. The meeting that the company's employees could not ask questions to Ravindran. From corporates, now moving on to those stocks that were in news and making headlines for the day, and also analyze the reason behind it. First up is shares of Tata Communications, a company related to the telecom business of Tata Group, saw a decline of up to 4.5% on Friday. During the day, the stock fell to 1,512.45 rupees. However, it recovered a lost ground and closed almost flat. The trigger for the share movement was acquisition of a US company, Kaleyra, for $100 million. The deal also includes gross debt of $224.9 million and net debt of $149.99 million of the NYSE listed company. Most of this debt is related to the earlier acquisitions made by Kaleyra. This company, associated with the business of enterprise messaging, provides integrated communication services to its customers through messaging, video push notifications, email and also voice-based services and chatbots. According to a statement issued by Tata Communications, this acquisition will give the company an industry-proven platform with strong capabilities and scale. After the announcement of this acquisition, Motilal Oswal has given neutral rating on Tata Communications with a target of 1,550 rupees. The broking house believes that this acquisition can increase the company's net debt by 22% to 6,800 crore rupees. The stock of AC generators and motors maker TD Power Systems saw a huge jump of up to 10% on Friday, which is the biggest one-day jump in 3 months. During the day, the stock touched a high of 249.40 rupees, which is the record highest level of the stock. In fact, the promoters of TD Power sold almost 24% stake in the company in a block deal. A total of 3.76 crore shares of this company were traded at an average price of 221 rupees. The sellers included Nikhil Kumar, Mohib Noman Bhai Kericha, Hitoshi Matsuo, Sophia Mohin Kericha and Lavanya Sankran. The promoters hold a 58.45% stake, which is likely to come down to 34.45% after this stake sale. The stock of the country's largest commodity derivatives exchange, MCX, saw a huge decline of up to 14% on Friday. At a point, the share price had also dropped to 1,411.40 rupees. However, later it recovered and the stock closed with a weakness of about 8.5%. In fact, on June 29, the board of this company approved the extension of the software agreement with the existing vendor 63 Moons. According to the information given to the stock exchanges, under this agreement, the company will pay 125 crore rupees to 63 Moons every quarter, whereas in the March quarter, the company paid a total of 87 crore rupees. This means that there will be an increase of about 44% in the expenditure of one quarter. MCX long-term support service arrangement of 63 moons ended on September 30th, 2022, and at that time, MCX had selected TCS as the new technology service provider. Despite this, the agreement with 63 moons has been extended 3 times. Brokerage houses have termed this move as a short-term negative for the stock. Motilal Oswal has maintained a neutral rating on the stock with a target price of 1,550 rupees, but post this announcement, 63 Moon shares rallied 18% to hit a 52-week high of 255.90 rupees. The stock of Credit Access, a company associated with the microfinance business, saw a decline of more than 6% on Friday. The stock had touched a low of 1,244.95 rupees in intraday, and closing also happened with a weakness of about 5%. 1 crore shares were traded in Credit Access stock on Friday, which is equal to 6.5% of the company's total stake. The value of this block deal has been estimated at 1,277 crore rupees. The buyer and seller could not be ascertained in this block deal, but according to media reports, the company had plans to sell 5.8% stake in Credit Access India through a block deal, due to which the promoters had a plan to raise 1,107 crore rupees. As on 31st March 2023, the company's Dutch promoter Credit Access India BV held 73.68% stake in the company. The floor price of this block deal was fixed at 1,230 rupees per share. Shares of asset management or mutual fund companies saw a jump of 7 to 15% on Friday. Shares of HDFC AMC even touched a 52-week high of 2,349.90 rupees during the day. The reason behind the enthusiasm in the shares of mutual fund companies is the decision taken in the SEBI meeting. Several important decisions were taken in the meeting of the market regulator SEBI on June 28th, in which the expenses to be recovered by the mutual fund companies from their investors. A decision was also going to be taken on total expense ratio, that is TER, but SEBI has postponed the decision on TER of mutual funds and said that another consultation paper will be brought on total expense ratio. Not only this, SEBI also said that the mutual fund industry will be happy with this second consultation paper. This is because it was believed that the expenses charged by the mutual fund companies, that is TER, would be linked to the performance of the fund houses, and poorly performing fund houses would be able to recover only the base charge. If this happens, then analysts believe that the profits of AMCs would decrease by 20 to 30%. With this decision of SEBI, a relief rally has been seen in the shares of all mutual fund companies. That was all about corporates and markets for the day. Moving on to some important corporate events and triggers which could make big market impacts over the weekend. Let's take a look. On June 30th, impact of US June consumer expectation figures to be felt in global markets. Also, impact of Europe's June CPI inflation data to be felt. June auto sales figures to be released on July 1st. Quality control rules will be applicable for footwear companies starting July 1st. And on July 3rd, it's day 2 of PKH Ventures IPO. IPO was filled 5% till 4 p.m. on day 1. Price band of IPO was fixed at 140 to 148 rupees per share and will close on July 4th. SGX Nifty trading will shift to GIFT City on July 3rd and Gensol Engineering to shift from SME to main board. Trading will start on BSE and NSE also. US markets to open for half a day on July 3rd on the occasion of Independence Day. That is all tonight on Corporate Central. See you on the other side of the weekend. Take care and good night.